Joining us now is our friend Brian Kronberger, a financial analyst and advisor with RBC Wealth Management. Thanks for coming in today.
Thank you.
All right, so we had this seismic political earthquake, and at least initially, there seemed to be a seismic reaction.
Yeah, huge shock, certainly to the market. Market had been rallying, thinking the status quo was in play, and gridlock in Washington, D.C. Had the Nikkei 2 nights ago down 5%. Asian markets were down, and it looked as though at around 2 o'clock I was still up looking at the markets were going to be down as much as 850 points. We open up positive right out of the get-go. Market closes up 1.4%. Now we're less than 100 points from the all-time high. So huge rally, and I think part of that is $12.5 trillion in cash on the sidelines. We know cash isn't earning much with low short-term interest rates, and some of that cash clearly is making its way into the market.
Well, what's interesting is after his speech where he talked about infrastructures, people seem to be buoyed and have a sense of confidence, and in fact, infrastructure stock is up today. Biotech up as well, correct?
Biotech,
Defense?
financials, defense, infrastructure plays huge. I think, I say the word huge lightheartedly with,
Right.
but I think everything was big, right? Big infrastructure, less government, big defense, and I think conciliatory remarks back a little bit, but there's certainly going to be a change. I think lower tax rates, a repatriation of the money overseas back in, infrastructure spend, lower tax rates. Initially, the market's saying growth is going to be higher. You saw interest rates rise a little bit, and that's a sign that growth is going to be higher in the short run. And a little bit of confidence in the market, again, with cash on the sidelines not earning much. I think that's the reason why you had the rally today.
But there's still a great sense of uncertainty about his policy. In fact, the chief investment officer for AllianceBernstein told the Wall Street Journal, "We just don't know what he stands for." So what is your sense of how that uncertainty about policy could continue to impact?
Huge uncertainty. I mean, he's got a track record as a business manager, a businessman, and owner. So the track record is actually deeper than a lot of politicians. However, in the political world, he sees himself as an outlier. He is an outlier. He is an outsider, and it'll be interesting. I think the first we'll see is the transition team. Who does he put in charge of these cabinets? And I think Christie probably has a huge impact on that. But as you start to see those individuals line up in the cabinet and what they're in charge of, then I think you can start to make some assumptions of how that's going to play out in the economy. But complete unknown at this point.
Does he pull from Wall Street?
I can't imagine he's going to be pulling from Wall Street. I don't see him
become
pulling.
the pariah.
Ironically, the financials rallied big today. That was one of the bigger winners.
Right.
But I can't imagine he's going to be pulling from Wall Street. And I think the Federal Reserve is in jeopardy a little bit here. So Janet Yellen, is she going to stay around as the Fed chair? And that's probably the biggest news of all in terms of the short-term direction of the markets.
For sure. With 30 seconds left, what do you tell investors today?
Well, if you missed the best days in the market, the market trend line since the early 50s has been a 7% return before dividends. Again, I'm talking about the stock market. If you missed the 10 best days, the past 150 days, you might as well be in short-term Treasury certificates deposit. You can't time the market. Easier for me to say in a market like this, but I think you've got to stay with your allocation of diversified portfolio.
All right, Brian, thanks. Always good to see you.